Hello everyone, and welcome back to the Impulso Podcast. Today, Janggan and I are joined by Omar Kassim, and we're going to be discussing the venture ecosystem in the Middle East. So thank you for joining our podcast today, Omar. Maybe you could introduce yourself a little to our listeners since it's your first time on our podcast.
Let me just add one thing. Everyone in the Middle East knows Omar, but many of our audiences are from Southeast Asia and East Asia. So
thank you. That's high praise. Yeah, thanks so much for having me. So I grew up in the region, or more specifically grew up in Dubai. My first startup was essentially way back when, sort of early 2010. I basically built a marketplace platform for about 6-7 years, exited that to Noon. Noon is essentially Amazon's only serious competitor in the MENA region. I then did some side projects, and most recently we're basically building a B2B, what we're calling a revenue capture platform. So I did Y Combinator in summer 21, raised a seed round, sort of in the midst of sort of building out the enterprise B2B payment/revenue software platform. So yeah, thanks again for having me. Great to be here.
So I think you mentioned you've had a lot of experience in the sort of tech and venture ecosystem in the Middle East, right?
Sure.
So how do you think you've seen it evolve over maybe the last 10 or 20 years?
Well, 20 years, that's long. That's long. We're just talking about cycles,
Yeah, I think, a great question. I think the ecosystem's still very young. We're sort of going back to where we're now, 24. I think the ecosystem basically started to exist in like 2008, 2009. We saw the first venture funds start to take shape, and the first venture firms started to take shape in sort of 2010 onwards. I think we've sort of seen maybe 2-3 mini waves since then. So the first was very much sort of e-com led. So you had e-com sort of direct plays, you had marketplace platforms. I think one of the sort of the hallmarks there was, which is our sort of, Lazada equivalent, exited to Amazon in 2017. That was one. Careem, which is our Grab equivalent, essentially exited to Uber in 2019, just before Uber's IPO. And so we had this ride-hailing food delivery wave. We've now got what's ongoing is basically a fintech wave at the moment. And yeah, I think we're still a young ecosystem, but have accelerated and come along pretty quickly over the last, I think the last 2 or 3 years has been super, super interesting as well.
And obviously, based in Southeast Asia and spending lots of time in China, so we do see that there's quite a bit of, I wouldn't say pessimism, but quite a bit of weird sentiment in this region. So because China has seen a growth story in tech for the last 20 years, and especially between 2011, 2016. And now people are a little bit perplexed, what should we do now? Because all the big opportunities have been occupied. And of course, because of geopolitics, and exit has become hard on either side. And in Southeast Asia per se, what we saw is that there was quite a bit of the money coming in, and more money. If you look at the numbers being tallied, more money than what went into the startup ecosystem in Middle East or Latin America. But now we're in a situation that the money is being withdrawn, and many of the startups here have reached unicorn level, but because of the friction in the market, because of the challenges of developing an organization, a solid organization in a very short period of time, so they're left in limbo, right? They have a lot to catch up to match their valuation, which was given in 2021. So when we look at the Middle East, what do we see is different, and where are we now? And do we think that what people have perceived as a slow growth in the past few years as compared to other emerging regions actually help the Middle East build a better healthy ecosystem?
Yeah, I think there's maybe one, if I had to sort of pull on one thread to maybe kick this off, I think the primary economic activity in the region traditionally has been led effectively by energy and essentially oil production, right? That story continues today. I think one of the initial benefactors of that oil wealth was essentially the sovereigns essentially setting up funds. And to some extent, so you're going back to sort of the 1960s and 70s, the sort of the local benefits of, the benefits into the region were essentially two things. One was there was some development in the real estate space, and there was effectively, because of the tribal system that we have in the region, there was knock-on effects for the tribes and families that were close to, effectively the sort of the ruling parties, et cetera, et cetera. What has happened since then is that the sovereigns then went out and essentially invested. So I'm doing a little bit of history here, but they went out and invested in PE as well as, trophy assets and so on and so forth in a number of parts outside of the region as a sense of diversification. that eventually going into sort of the 2010s, 2015s, et cetera, they started to allocate funds to effectively some of the well-known venture names out there. So whether it be in recent or whoever, there were allocations that were carried out both from, you're talking about guys like PIF in Saudi, you're talking about, some of the allocators in Abu Dhabi. I think what's happened, say 2019 onwards, there's been a much more inward focus, recognizing that, and I think the UAE was a little bit ahead of the rest of the region, that they had already started to build out physical infrastructure, they'd already started to build out legal and regulatory infrastructure to encourage that ecosystem development. I think what happened in Saudi, which is obviously the largest economy in the region, they realized they were behind, started to look inward, and the government really started to push by saying, okay, let's not just allocate outside, we need to start allocating inside. And that meant direct investments, they started creating fund-of-fund vehicles and investments into the local VC ecosystem. And that led also to sort of second actors, so whether that be multinationals or regional sort of operators, it was family businesses, they started to get active in the venture ecosystem, going from learning from the government's lead there. And so I think what that has resulted in is that today there's significant capital availability for the local ecosystem, and specifically, I think less so in the UAE and much more so in Saudi today, that's very much now focused on domestic opportunities and building out the domestic ecosystem. And I think, because we went through this journey of sort of investing outside, so if you remember all of the, there was a great stat from Mr. Yossi-san when SoftBank went out and raised, Vision Fund 1, $45 billion in 45 minutes, $1 billion a minute, et cetera. So that was some of the stuff that was happening, right? And a lot of that stuff is now switched off, and that capital is effectively focused on the domestic market. Not solely, but a lot more focused on the domestic market. And, and maybe to end on this point, Aramco, which is Saudi's essentially dual asset, one of the largest companies in the world, generates roughly $100 billion in bottom line every year. And that money needs to go somewhere, $100 billion, right? And so what do you do with that capital? And there's a fair bit of it that's been allocated into, I'd say, the greater venture economy, right? Where you're effectively going out and saying, hey, I want to build all of this infrastructure that's been missing, and we've got the capital to do it. And so I think that there is, because you've got so much cushion, there's this continued optimism rather than pessimism for the ecosystem. Sure, there's been a little bit of, slow burn, but I think we're looking pretty healthy at the moment.
Actually, it's interesting that you mentioned about Vision Fund. That was actually a great experiment, I think, on the side of SoftBank, but also on the side of PIF. I remember in 2019, I was actually at the Future Investment Initiative in Riyadh, and that was October 2019. That was a stressful point for Masayoshi-san. I think he was speaking at the event, but when he was walking on stage, there's half of the Saudis in the audience just left. So of course, people sitting around me saying we're trying to interpret this, saying that they're probably not happy with his performance. But this was a great experiment, but not a lot of money actually went into this region, right? I mean, from Vision Fund point of view.
Yeah, there were one or two token investments. I think when Vision Fund 2 happened, they, if I remember right, they invested in a cloud kitchen business called Kitopi. Kitopi is fantastic, great business. But one of the reasons, or at least the noise in the ecosystem at the time, was that the reason SoftBank did that was to signal to PIF and others that they were essentially willing to allocate in the region. And so I think the challenge there has been, and I think a lot of that has, from those initial experiments, I think today when you look at, one of the arms of PIF is a business called Sunabil. Sunabil is essentially their sort of bread and butter is allocating to venture funds, as well as they have a smaller business that does direct investments. That capital essentially now is being allocated with the view that, or not a view, I think it's almost, and obviously I've not seen the terms here, but you effectively, those investors need to allocate into the local ecosystem. So I think they recognize fire error and basically have said that, look, we want to attract all of these great investors. We do want to attract, we do want to provide capital to them. We see financial returns there, but we at the end of the day, we want that to benefit the regional ecosystem, right? We want that to benefit our own economy, and we want that know-how to be local, essentially.
And what you have just described, dynamics between Saudi and UAE, it's in a way that both are driving agenda to develop the ecosystem, domestic, but do you also see that as somehow competitive? So Of course, UAE, led by a few organizations in Abu Dhabi, they are driving a lot of initiatives, making lots of allocations. And then you have the PIF and also the Saudi forces, which I think, as you mentioned, that spending a lot of energy to persuade people to actually develop venture or invest in venture in Saudi Arabia per se. Do you think that will create two parallel sort of set of companies, or the market access is actually pretty smooth?
Yeah, I think, and the reason I smile is that we're getting myself into trouble. I think there is tremendous competition there. And I think the reality is that, led by, and again, just, brief history for anyone that isn't in the know, the current, phase of growth that we're seeing was effectively led by Dubai. So Dubai's economy traditionally, and they within the UAE, they never had much oil. Only 10% of the economy, or 10% of GDP of Dubai's sort of state GDP is accounted for by oil. And so they always had this slant towards being much more entrepreneurial and wanting to attract goods, services, people to the city, to the state. And I think on the back of that, both Abu Dhabi and Riyadh realized that, look, there is an opportunity. We're sitting in a geographically interesting position. We've obviously got a lot of capital, and we should build up our own economies and sort of sub-economies and so on and so forth. So led by Dubai, followed by Abu Dhabi, the UAE took the lead. And relative to, we're a population of 10 million people and a generally addressable population of probably about half that, so about 5 million people. And so you're talking about very much a Singapore-style model where we effectively, are definitely punching above our weight. And so I think Saudi, who are 40 million people, spend like they're 80 million people, is looking at this thing and thinking, hey, what's going on here? Where's the imbalance? And there's essentially, especially over the last couple of years, has decided that, look, we've got the capital available, we're building the infrastructure, and have essentially decided to compete very hard on being able to attract both talent as well as entrepreneurs and all of the resources that are required to build out their own ecosystem. So much so that, and give you a couple of examples, there was an initiative, I think this was going back probably 18 months ago, where the Saudi government turned around and said that, look, we want businesses that are in the region to basically set up their headquarters in Saudi, and that typically means in Riyadh, or depending on what part of the economy you're working in. And it was a direct competitive threat to the UAE because most regional businesses, regional operating teams from, like, say, PepsiCo downwards are based in the UAE, primarily based in Dubai. And it was essentially saying, look, you need, if you want to, and so much so that if you want to access Saudi contracts, if you want to access Saudi government contracts, you need to be in Saudi on the ground, and not just the nameplate. Your teams actually need to be based in country as residents. That's been one, and then that continued so much so that, for example, Abbey, which is the largest BNPL player in the region, a team that I'm pretty close to, they started off as a business in the UAE. About 80% of their business today it comes from Saudi. About 20% is the UAE. They basically decided about, I think it was going back 3 months ago now, they officially moved their headquarters to Riyadh, and so much so that they were being, effectively. They were sort of high up in Saudi's government. There were multiple participants who wanted to sponsor them to come out and be that sponsoring individual to bring them out to Saudi. Again, so, it's sort of the model in Saudi is a little bit different in that they have a very open model in the UAE, right? Anyone can come, anyone can set up, anyone can participate in the economy. In Saudi, that, the model has been more, we want to attract the right people here first. And I mean, they're definitely opening up at the same time. I mean, it's easier to set up a business in KSA than it used to be before. The model is more, we've got this, we want to bring people out, we want to sponsor them, we want to provide them with the right incentives, and want to enable them to essentially operate in the economy. So yes, sorry, long response, but there's a ton of competition there, and it's going to be very interesting to see what that looks like. And it's across sectors. It's not just in tech, it's in infrastructure, it's in whether it be airport infrastructure, whether it be real estate, whatever it may be, there's just competition across the board today.
We also actually saw competition initially in Southeast Asia, right? For a long time, Kuala Lumpur tried to compete against Singapore in multiple ways, in airport, in sort of companies set up their regional headquarters, they even built a port that's like 30 kilometers from the Singapore port, and actually larger. But actually, I think competitive pressure forced Singapore to always act very efficiently, because they know that, okay, they don't have actual sort of depth that they can own. So they have to be more efficient. They have to be transparent, etc., etc. And also it actually made Singapore even more efficient. So I think that this competition, as long as people still keep access to other markets, etc., I think we're healthy for business.
Yeah, for sure, right? And I think there's a lot of parallels to you. I mean, you mentioned Kale, but I think the way I think about it is probably the closest parallel is essentially Jakarta versus Singapore, right? And so that's where the mass population is. That's where we want to go to be able to if you're building something that you need that sort of access. I think UAE Saudi is very similar, right? And we're like, Dubai and Abu Dhabi versus Riyadh today in that, where the competition is definitely healthy and it's forcing both sides to think about, what is my competitive advantage here? How can I build out and do things that potentially the other can? And so, for example, we've seen some, interesting ones, but good and bad depending on stances. So, for example, in the UAE last year, we changed our weekend. We've been talking about this in my lifetime, I've seen 3 weekend changes now. And so we've been talking about this on and off, and it's been sort of being quietly tested for a while. And so we moved from a Friday, Saturday weekend to a Saturday, Sunday weekend. And so effectively lining us up with most global markets. Saudi, that's going to be, just given the religious context and the religious importance of a Friday, that's going to be extremely difficult to do. And so the UAE is like, look, we compete globally. We're going to do this. So for example, in parts of the UAE, just north I starting to see the first gambling resorts being built out and sort of a loosening up around that. You're in Abu Dhabi, you're starting to see the first, I think it's going to be the region's first brewery that's going to open up. And so I think you're starting to see areas of competition where, and those areas Saudi is not going to compete on, at least not, by any speed, probably for the next, 15, 20 years. And so I think where you can't always leverage capital, you can, leverage regulatory environment, sort of infrastructure, so on and so forth. So it'll be healthy, and I think free will economies will end up building out differentiated offerings essentially.
And an ecosystem today, and of course, it's a evolution journey. Now, you are a founder again, so what do you see as the challenges for the vision?
I think it's a question. I think the way our economies are set up today, government remains. I think there's some structural challenges. There's also sort of the region is today. Probably, but those are the couple of things that I think about probably most often. But I think the big structural pieces is that government, through both direct participation and sort of quasi-participation through entities that it or invests in, still is a big part of the economy, both in the UAE as well as in Saudi, and so much so that if you go down to Abu Dhabi, both government sector, both government as well as in the private sector, you've got a lot of involvement, and so I think that creates a natural ceiling on how much room there is to potentially grow. And so if you're not, if your product, service, or whatever you're building is not addressing that sector, is there enough room for you to actually build something meaningful? That's one. Two, at the end of the day, even when you look at Saudi's economy today, where Saudi today is, the UAE is, let's say, $300 to $400 billion of GDP. And don't quote me on these numbers, but it's roughly that. Saudi, depending on where oil prices are at in a given year, is sort of in the 1 trillion, let's say 750 to a trillion range. To put that into context, Greater Los Angeles today is a $750 billion economy, just LA. So, even when you take both of these opportunities together, relatively speaking, for, in the context of the world, they aren't the largest opportunities. But I think within certain pockets, within certain industries, and if you understand the operating environment, there are opportunities to build large businesses. And you've seen it in previous generations where there has been room to build retail businesses or build out businesses in say, development and so on and so forth. So I think it's in sort of maybe quite carefully about what are those opportunities today, what does the operating environment look like, how do I sort of build some scale and leverage my know-how essentially. These structural challenges in any economy exist. I think you need to figure out how these structural challenges are different to other operating environments and essentially address them appropriately essentially.
Mine, who's an investors who have been looking at market in China, venture market in China for the last 24 years. And he had an interesting theory, and he said, why does certain spaces become excessively competitive in China? His theory goes, which is quite unconventional. He said, probably have a few sectors in China where the government encouraged, but then the sector goes out of control, like P2P financing. And then the government will say that, okay, because it's so hard to regulate, we should ban the whole sector. That has happened a number of times. And as a result, what that creates is looking for relatively safe sectors. And we have excess of talent and not that many, because people are worried saying, hey, if I build a business to $2 billion, $3 billion valuation, then suddenly there's a regulatory change. But we understand where the government is coming from, but it makes it very difficult for me. And I might as well just build something safer and talent and resources are pushed towards certain businesses which are considered safe. And it makes this extra competitive and margins very thin. So you are now doing fintech, and obviously there's a lot to do with things. I don't want to get you into trouble, but how do you see the regulation landscape? Because it's a difficult balancing act for any regulator anywhere in the world. There's so many things which are pushing the boundaries. And
just going back even to your prior point, I think we see less around that economy, but there are definitely. I think one of the things that has been very accepted model in the UAE has been, something new happens, let's allow it to build out before we regulate it, before we think about how does it actually work. So like what you sometimes see in economies like the EU, regulation tends to lag by a fair bit. And bad, right? Good that if it's an appropriate thing, it'll develop itself and allow that operating room. And bad because you especially in the UAE or in Dubai, when we run a very open economy, it can sometimes attract participants that you may not necessarily want to attract. But I think those opportunities tend to be interesting. But speaking more specifically about regulation, from an environment where, and if I talk about just the wider region very quickly, I think Saudi financial services perspective is actually very well regulated. So you've got SAMA, which effectively regulates the banking sector and pretty much all financial services. You've got CMA, which effectively regulates the capital markets. Yeah. You've got a couple of others, but those are the two large bodies within. And the reason I'm specifying this is that you've essentially got a single regulatory framework for the entire country, and you either take the framework and operate within it, or you don't. And what's happened is they've been quite looking and forward thinking when new things have come along. So to give you an example, when BNPL happened, and BNPL lower card penetration rates, etc., as well as and more, I guess to a great extent, lower credit penetration from a consumer perspective, especially in markets like Saudi, BNPL really took off very, very quickly. And really, SAMA turned around to some of the early players and said, no, we're not going to regulate this. And then when they saw the second player coming up and the third player coming up, they essentially turned around and they very quickly added a category to their sandbox and effectively invited all of the players to come in and apply and be part of the sandbox, and effectively left them in the sandbox with fairly liberal controls in that, saying to them that, hey, do what you need to do, and then at some point we regulate. And at some point was actually literally, going back like 6 months ago, where they started granting the first licenses. Indeed, we've got a slightly, I think a similar model follows in the rest of the region, single regulator. The UAE is slightly different in that we've got a couple of financial free zones. So we've got DIFC and ADGM that are effectively construed English law with their own court system, set of regulations. They've been very forward-looking. The challenge that you've got there is that, unfortunately, a few people who are new to the region get caught up in it, that both of those that were effectively built out for wholesale offshore banking and financial services, and people have sometimes attempted to use them for domestic operations, and they don't quite work out. So we've got Bank of the UAE, which effectively regulates all domestic financial services, and Emirates Securities and Commodities Authority that regulates all capital markets. The challenge that we've got in the UAE is that there's a little bit of confusion around who's regulating what. I guess the upside, though, is in the last 2 or 3 years, the central bank has got their act together a little bit, now got regulatory frameworks for payments. So for the last 40 years, for example, 35, 40 years, Visa, MasterCard have not been regulated. None of the cards were regulated. And so now we're going through an exercise where the central bank has opened up. The last I heard, there were 95 firms in their backlog at the moment. They want to effectively license and regulate up to 250, 260 firms over the next couple of years. We've got a framework now for stored value, so the wallets and so on and so forth. So I think we're playing in the UAE, we're playing a little bit of catch up, but I think there's an acceleration there. The good thing is that, outside of, so the one thing that's not opened up yet is getting a banking license in the region is very, very difficult, close to impossible. And so that's not open up, but all of the services around that, whether it be insurance, whether it be, payments, whether it be wallets and so on and so forth, have been opened up by and large, not just to local competition, but also to international competition. So now you've got, even guys like, for example, WorldPay, FIS has a license in the UAE there. So you're starting to see catch up, but fairly quickly, essentially. They've sort of seen that if we don't move quickly, then some of these opportunities are going to be lost, essentially, to either sort of regional competition or potentially even competition outside.
So basically what we're seeing is that actually fairly professional, pragmatic regulators and who sometimes need to play catch up, but they're doing whatever they can to actually accommodate to ecosystem innovation. What's this in a way?
Yeah, and I think you need to, right? I mean, and I think it's more UAE specific nature of our economy. I don't remember the exact date, but we were added to they call it the grey list. I forget which regulatory body this was. And we've the political pressure, we've had internal pressure to essentially make sure that the flow through Abu Dhabi and the rest of the economy are essentially and sort of are not enabling the sort of activities that you don't want. And so I think it's been so on one hand you can understand there's significant pressure there from a regulatory perspective in terms of trying to solve for that. At the same time trying to build out the ecosystem, right? And so handle both. So you want to encourage innovation, you want to encourage firms to come in, but at the same time you want to make sure that they understand what it means, right? And so the challenge that you sometimes have, especially with I go back and think about, I wish I knew some of the lessons that I know now back in my 20s. And so when you've got young entrepreneurs, someone turns up and says, hey, I want to build Venmo for the region or whatever, recognizing and realizing that building the product is probably 20 or 30% of the problem, right? There's so much before I even park the go-to-market piece, there's so many things that you need to do from a regulatory perspective, right? You really need to understand those flows and who you're going to partner with and so on and so forth. So I don't think it's the easiest job in the world being a regulator or being a regulatory body today. A lot of challenges there. And so
certainly not. Yeah. Briefly touched on buy now pay later. I just want to understand a little bit about that because 2 years ago, buy now pay later was very hot across the globe, but each market had very, very different structures, right? And it has very different sort of sale. Where actually, buy now pay later essentially is a payment service, and have cost of capital, which are many of the players. And then you have a proportion of large platforms, right? So for instance, I have a few friends from China who worked for and stuff. They never understood why. So for instance, e-commerce platforms in Southeast Asia would work with a third-party buy now pay later player. They would never understand why Amazon would work with a firm. And why? Because they said, look, the buy now pay later is something we can do ourselves, and our cost of capital would maybe not be too low, but will not be higher than them. And we don't want to hand over our customer data to a third party. So this mindset that from many of the Chinese players I see. But how do you see that the structure which actually allowed buy now pay later to actually?
Yeah, I think great question. I think they were on the back of that global wave. Buy now pay later as an idea initially was almost. And you look at the two big players at the moment. So and who run Tap. Founders basically ecom. He used to run a business called Namshi, exited, etc. In the space, and so understood some of the customer acquisition challenges, and effectively we're seeing BNPL as a hyper efficient way to acquire consumers. And if you look at Tomorrow, who's Tabby's largest competitor, Tomorrow was essentially and not to do a disservice to the founders, but was almost brought to market by Checkout. So Checkout.com. Alongside and Stripe, were one of the large processors acquirers globally. The region since 12 or so, so knows them pretty well and saw the BNPL wave globally, invested a bunch of money in our sort of come to market. And so I think the initial recognition was around this being a consumer acquisition play. I think as the players went to market, there was more recognizing that, look, the opportunity potentially than we thought, because while we have some level of, so the UAE is well penetrated from a card perspective, right? And you've got card penetration. So we've got the way Saudi works today is that China Union Pay, they've got a card network called Mother. Mother actually is 90% of all transactions. Visa, MasterCard is only 10% of the market. Largely debit-led, and don't have a ton of access to consumer credit. And so when BNPL came out with this opportunity to sitting alongside the e-com wave, it made, and you're effectively saying to consumers that, look, you can now obviously buy more than you potentially could, and so on and so forth, started to make sense as a play. And you sort of look at the players that started to, Shein was an early adopter with the players, eventually adopted Tabby, and the large e-com players effectively saw this as a way for them to be able to acquire customers faster and cheaper, and some to do that, while not taking on the headache of consumer credit risk, right? And understanding that those pieces. The challenge that you now have for BNPL is that the way both of these large players are now structured, most of the capital that has come to fund them and has been from outside of the region, at least from an equity perspective. That's starting to change now a little bit with their lending rounds. That has gone to also fund those books has largely come from outside of the region. I think the challenge and both UAE and Saudi are both dollar linked. Both the currencies are both linked to the dollar, and so therefore any interest rate increases in the US automatically get imported in, so that we can hold those FX pegs in place. The challenge today, and it's something that a lot of people are asking, is that fine, you've built this great consumer credit business. What does that mean in a non-zero interest rate environment? They've successfully both been able to raise capital. Tabby's fund was November last year. Tomorrow's was December last year. Where do these businesses essentially make money? With the numbers that I've privately seen, I think those ways, there's some ways off. I think they're, again, great, interesting businesses. Will they actually end up, being successful and being profitable? Is another. They probably don't want me to say that, but hey.
I mean, I'm like studying like how Ant built their credit business, and all of the other platforms are trying to copy from Ant, right? Essentially, you use the competitor to facilitate, your own platforms and redundancy on third-party players, and that's why they are always doing first-party, and they take on a lot of leverage. But that's also something to do with how the banking system in China is set up. Like lots of banks taking lots of deposits and not able to find assets which give them the decent return. So that allowed to have a very high gearing ratio. I think it's almost like 100 times in certain instances for the lending products, and then they issue consumer loans. So buy now pay later, break even, good for them, acquiring users, and converting these users into customers, and then make money from there and take lots of leverage.
Yeah,
I'm not happy now about it. But
I think one of the structural challenge that you have there is that if you and this sort of goes back to the regulatory question, right? And so fine, you're now regulated you've got some ability, you've got some licensing around BNPL, but the reality is, in order to bring your cost of funding down, to be able to build out these other products, you need access to additional forms of licensing. Ideally, you need access to a deposit base. And that can only happen with some sort of financial services license, ideally a banking. And so I think there's some structural challenges there. You've also now got the Visa, MasterCard, these still remain the primary rails, have also not sat still. Visa's got an interesting BNPL product that they're building, and so they're naturally going back to their issuers and saying, hey, we can now offer all of the tech that you need. And for longer periods, you can do it cheaper, you can do it faster. And so I think on the side, some regulatory pressure, you've got some, funding challenges, and then you've got, sort of new forms of competition. One of the areas that, I always thought this would end up sort of going out to. So, in the UAE specifically, we've got a very deep graveyard of attempt at wallet plays. And for lots of very structural reasons, there's never been, strangely, for people that come in from the outside, we don't have a successful wallet play. There is no one great wallet that you can use in the UAE. massive. So everyone's got a tokenized card on their device. And so I think that was potentially one area that BNPL could effectively become like a de facto Cash App style default sort of venue. But again, the ecosystem is slightly different. You've got one of the large telcos, they are the dominant wallet play out there. And so that space is also occupied. But it'll be interesting to see where this sort of breaks up. But some interesting business, interesting scale sort of built out, but where the business model end up evolving to.
How about at some point of time you were very passionate about it, and I had a stint in Dubai in 2017 where I observed, of course the situation, how the slashed, then Jolly Shake started entering the market, and then Noon came about, so there was great excitement. And there was also, I think, a bit of anxiety from that was when Fetch was still around as well, right? And there was great amounts of people saying that, okay, is it really going to it? And when all the talent to develop this, and Chick at that time was aware, and they said, okay, is there anything out there that we didn't know? So, but fast forward to 2024, how do you see that ecosystem? And
my not been following it as closely as I used to. From the past, kept my eye on. I think. We've ended up with largely Noon competing from a marketplace perspective, but enough slash businesses competing with direct plays on various brands. From a venture perspective, most of those are subscale and therefore are a complement to the sort of again, you direct plays on grocery and so forth. A lot of that wave that existed in, from sort of the early trends through to, let's say, 2017, 18, 19, a lot of that early wave has essentially died out and lost out to both Amazon and Noon. So if you were building some general marketplace proposition, etc., the other two have decent share. You've got some local players, but Shein, I think, has done a fantastic sort of making both part of its global footprint. More has also started to make inroads into that discount category. So most of the discounters, we had one large local player that died out. I think Temu in that it probably doesn't have a ton of competition today. Today, where we are a consuming economy, I think when post-COVID is that the way our infrastructure works, given the weather, people like to be out and about, and people don't go to malls just purely to shop. They go out also to and for dining and so on and so forth. And so the non component or the offline component of retail still remains a big piece. Today, if you sort of look at debatable whether it's sort of part of that tech ecosystem, but let's assume it is. You've got e-com as one component. We've got probably the largest, let's say most powerful food delivery operations in the world. Food delivery is absolutely massive. If you go through Deliveroo or Delivery Hero's numbers, so Delivery Labad and Hunger Station, they're the two largest region. You've got Korean also both playing food, and then you've got fintech. I think those are sort of the three big pieces. Around that, you've got these sort of smaller ecosystems. E-com's going okay. I don't, or those early waves have died, but I think there's a lot of opportunity because there's still a lot of consumption that's taking place in the region.
And so from where we look at, I wouldn't say turmoil, but all the things that's happening, in the ecosystem in China, and of course there's lots of buzz in Southeast Asia and to an extent Latin America. And for your point, last 2 years, probably people going to the Middle East, to raise money or to raise money for LPs, and to experience from this region, which have been shown some of the streets. But from your point of view, how do you see the China and Southeast Asia?
Yeah, great question. I think given what's taking place in the region and the sheer amount of capital that's being put to work, whether it be on physical infrastructure development. So I think when I think about probably some of the up and coming sectors today, entertainment, healthcare, education. If we don't mention AI briefly as well, there's a lot of government-led. There's a lot of initiatives in all of this, but there's definitely a gap from an expertise perspective. And so traditionally we would turn towards the US to some extent, to the UK and Europe. And today, when you sort of look at the region's geopolitics, with the situation today, typically, though, the Arab states would typically meet somewhere in Europe. And those meetings are now, and in very strong signaling, some of those meetings have started to shift towards China. And so you can see that there is no longer 100 focus towards the West. I think it's much more nuanced, much more balanced. And I think a lot of opportunities to, I think localize is the right word, but to bring broad expertise and broad experience and sort of look at the various opportunities and say, hey, I've seen this, I've understood it. We understand how to build mass market credit products, and what you need to do from a collections perspective, etc. We can come in and apply a solution like that to. I think that those opportunities definitely exist. Excites me about the region is that we're finally taking all of this capital that's being generated and essentially pointing it towards the region's economies and saying, hey, we can build this. There's enough capital there to do the needing to rely on anyone else. And I think balance that just thinking about how do you operate in these economies, and I think that's quite a different operating model to perhaps what people are using in other parts of the world.
That makes it exciting, right? I mean, looking at all these opportunities and if we overcome the challenges along the way.
Yeah, absolutely. And it's exciting when you can be optimistic about both the near and long term, right? I think it's challenging when all of this. I think our regional challenges are different in that while capital available, it's being put to work, etc. Obviously, the geopolitics around us, the entity around us, will also give a bit of a tinderbox, right? And so, and I think operating in that environment is also so money's available, but then the geopolitics could swing and suddenly sentiment changes and right. So but I think you keep that in mind, and as in other markets, I think that's just part of how we operate here.
And of course, going into 2024, really hope that the few conflicts will not escalate, and hopefully that they should end, because it's really bad.
Yeah, no, for sure. Yeah, without waiting in there, I completely agreed. We could all do with getting those things and getting back, building out our economies and building,
Yep. Anyway, so I think I'm optimistic, because there's really like a lot of things to great things to build. So I should probably come back more often.
Yeah, for sure. Yeah, and would love to have you back.
Hey, thank you much, Omar, for the sharing, and I think very overview, and actually drills into a lot about the sentiment and the sectors, the regulations, etc. So thanks for the things, and we'll talk more often.
Pleasure. Thank you so much for having me. Thanks, guys.
Hey, cheers. Bye.